begin session 2 with a comprehensive presentation on Mongolia economic overview and policy update. Please welcome Mr. Amarbayasgalan Batbaatar, Director of the Financial Markets and International Cooperation Division at the Ministry of Finance of Mongolia. Mr. Amarbayasgalan brings over a decade of experience at Mongolia's Ministry of Finance, where he leads Mongolia's engagement with international capital markets, overseeing sovereign debt strategy and strengthening partnerships with global financial institutions. Please welcome Mr. Amarbayasgalan. Thank you.
Good morning. My name is Amarbayasgalan Batbaatar, and I am the Head of Financial Markets and International Cooperation Division at the Ministry of Finance of Mongolia. And thank you for joining us here in New York for Mongolia Investor Forum, and for the opportunity to spend time with institutional investors, advisors, and our partners who have followed Mongolia's story over these past few years. What I'm presenting here today is for the purpose of updating this community on where Mongolia stands, on the macroeconomy, on our fiscal and debt strategy, on the longer-term diversification agenda that is increasingly defining our growth model. Let me frame the three messages we would like to leave with you today. First, Mongolia remains one of the fastest-growing economies in the world, anchored by strategic mineral wealth and increasingly diversified economic base. Second, our institutional framework has just been stress-tested by both political transition and the Middle East oil price shock, and it has held on both counts. And third, the policy direction set by our new government reinforces the reform agenda that has driven 3 consecutive credit rating upgrades in the past few years. Before starting the presentation, let me provide you an update on recent changes in the cabinet leadership. On March 30th, 2026, Prime Minister Uchul was confirmed by the State Great Hurl with 88 out of 107 votes, a decisive parliamentary majority. Mongolia has now demonstrated that through 2 successive transitions that our constitutional framework functions exactly as it should. Power transferred through parliamentary vote, not crisis. Prime Minister Uchul's cabinet, named on April 3rd, retained 8 ministers, including in the key economic portfolios. This is a signal of continuity, not rupture. In his inaugural address, the Prime Minister set out 4-pillar reform agenda: a freer market economy, a legislative efficiency, green development anchored in Mongolia's renewable endowment, and measures against corruption. For international investors, the practical translation is deregulation, legal clarity, and a more predictable licensing environment, and precisely the agenda this audience has been asking Mongolia to pursue. Let me now turn to macro picture. Mongolia continues to rank among the fastest growing economies globally. GDP grew 6.8% in 2025, with Q4 2025 printing at 6.8% year over year, the strongest quarterly reading since early 2024. For context, this is more than double the global average over the same period. This growth is supported by strong fundamentals for a frontier economy. Our credit ratings reflect that S&P at BB-, Moody's at B1, and Fitch at B+, all with stable outlooks. The S&P upgrade last October returned Mongolia to the BB category for the first time since 2013. Moody's upgraded us the same month. 3 upgrades in 12 months is not a coincidence. It reflects a sustained trajectory. Beneath the headline growth number, we have demographic base that many frontier markets strive to achieve. Nearly 70% of our population is under 40 years old, and our literacy is around 99%, and a generation educated abroad has come home with the language skills and international networks to engage Asia's largest economies directly. Mongolia's foreign exchange reserves reached record high of approximately $7.2 billion at the end of March 2026, providing substantial external buffer and reflecting the strength of our export performance. Mongolia has held regular competitive multi-party elections since 1990. The OSCE has consistently assessed our parliamentary and presidential elections as free and fair. We have one of the most open civic spaces in Asia, supported by more than 22,000 registered NGOs, and Freedom House rates us free with a score of 84 out of 100. And the new government's 4 reform pillars, free market, legislative clarity, green development, and anti-corruption, are designed to double down on what is working and fix what has held the economy back. Our growth story is anchored by strategic mineral wealth, but increasingly, it is also a diversification story. On the mineral side, Mongolia holds copper reserves of 60 million tons and gold reserves of 562 tons. Oyu Tolgoi, our flagship asset, is expected to be the world's 4th largest copper mine by 2030. In 2025, copper export revenue rose 76% year on year, overtaking coal as Mongolia's #1 mineral export. And gold exports rose 38%. This is one of the diversification we have been working toward for a while, and it is happening in real time. The economic structure is shifting toward more diversified, more resilient composition, and that diversification is what anchors our medium-term growth. Global copper fundamentals are, in our view, among the clear structural stories in the commodity today. Demand is being driven by 3 compounding forces: the electrification of transport, the build-out of renewable generation, and the extraordinary copper intensity of AI data center and infrastructure. According to Wood Mackenzie, global copper demand will reach roughly 30 million tons by 2030, with an additional 5 million tons needed by 2035 beyond projects already under execution. Copper prices have been strong, trading above 11,000 per ton for much of 2025, and the supply-demand squeeze is tightening. And Mongolia is greatly positioned to benefit through low-cost, long-life assets and expanding export infrastructure, including new rail links to China. A few words specifically on Oyu Tolgoi, since it anchors our long-term fiscal projections. OT has copper reserves of 43.6 million tons, gold reserves of 1,800 tons, silver reserves of nearly 12,000 tons. In 2025, the mine produced 345,000 tons of copper and is on track to average approximately 500,000 tons per year from 2028 to 2036. When fully ramped up, Oyu Tolgoi is expected to sit in the first quartile of global cost curve, and that cost position is what gives us confidence in the long-term fiscal contribution this asset will make across commodity cycles. Beyond copper and gold, Mongolia plays increasingly important role in global critical mineral supply chains. We hold approximately 3 million tons of rare earth reserves and 31 million tons of rare earth resources, roughly 20% of global rare earth resources, with 90% still untapped. For an audience thinking about supply chain diversification away from single points of failure, this is material. Mongolia is engaged with U.S.-led mineral security partnership alongside major Asian and European economy. In January 2025, Mongolia and France signed an approximately $1.6 billion investment agreement for the uranium project led by Orano, with production expected around 2028. Let me now turn how we coordinate debt, monetary, and fiscal policy. Mongolia remains firmly committed to deleveraging. Government debt to GDP has declined steadily and stands approximately at 40%, well below the 60% ceiling set under our fiscal stability law. Our medium-term debt strategy is structured around explicit quantitative targets on guarantees, local government debt, liability transactions, the share of infrastructure loans, and refinancing activity. We publish our performance against each of these indicators. Our maturity profile is deliberately smoothed. We've been active in liability management, including swaps, buybacks, and refinancing, to avoid maturity towers and reduce cost. And the domestic bond market is increasingly supporting our deleveraging and currency mix objectives. The Bank of Mongolia raised the policy rate to 12% in March 2025 and has held it there ever since. The tightening worked. Our headline inflation fell to an 18-month low of 6.5% in February 2026, down materially from peaks we saw earlier in the cycle. In March, inflation ticked back to around 7.4%, driven largely by food and fuel price pressures, flowing through the escalation of Middle East conflict in the late February. Brent crude prices rose over 55%, and for the country that imports nearly all of its fuel, that feeds quickly into our domestic products. And I want to walk you through what the government did about it, because the sequencing matters. The first and most important action was diplomatic and not fiscal. Mongolia engaged its key supply partners to hold contractual fuel prices stable despite the global spike, and secured commitments to maintain supply stability under existing bilateral frameworks. Our primary response to this oil shock has been to secure supply through diplomacy, not to subsidize prices through budget. Layered on top of that, we implemented a set of targeted, time-bound domestic measures. We held the retail price of the main 92 AI 92 gasoline in its pre-crisis contract level. We zeroed out the excise tax on the 92 and the diesel through 2027, and an amendment to temporarily eliminate the 5% customs duty on petroleum products is currently moving through the parliament. The priority is supply stability, not open-ended subsidy. That is the same fiscal discipline that has driven 3 of our consecutive rating upgrades in the past few years. Moving over, core inflation remains contained. On the external accounts, the picture is considerably stronger. The Mongolian tugrik experienced weakening in early 2025 on the back of declining coal export revenue, but has stabilized since early 2026 on monetary tightening and improved export performance. Our current account turned positive in September 2025 and has remained in surplus. Our foreign reserves, as I mentioned earlier, reached a record high of approximately 7.2 billion at the end of March 2026. That buffer reflects improved trade flows with China, rising copper export revenue, and disciplined foreign exchange liquidity management, including significant repayment of swap lines with the People's Bank of China in recent years. Mongolia has institutionalized the management of our mineral revenues through 2 core pillars. The first is our sovereign wealth fund architecture. The Future Heritage Fund currently holds assets of approximately $1.6 billion and cannot be drawn down until 2030. It exists to preserve wealth for future generations and is invested in international markets. The savings fund, with approximately $310 million, supports housing, education, and health sectors. And the development fund supports long-term strategic projects. Together, these funds generated investment income of approximately $67 million in 2025. The second pillar is our fiscal stabilization fund, with current balance of approximately $650 million. This fund plays a counter-cyclical role. It accumulates during periods of high commodity price and is available to smooth the budget during downturns, but only when specific fiscal triggers are set out and law are met. Our long-term development agenda is anchored by Vision 2050, including 9 national goals, 47 measurable objectives, and a phased implementation framework. For long-horizon investors, this provides policy visibility that is rare in frontier markets. Our mega project agenda focuses on 4 areas: expanding export capacity through projects like Taundulga-Kashun-Sokhai Railway, which is expected to reduce transportation costs by up to 50%. Two landmark projects worth highlighting are: one is the Mongol Refinery, $1.7 billion project financed by Indian Exim Bank, is set to commission in 2028. It will process around 1.5 million tons of crude oil annually and cover up to 50% domestic petroleum demand, directly reducing the import dependency that the Middle East crisis has just exposed. The second landmark project is the 90-megawatt Erdenburn hydropower plant, financed by the government of China, also commissioning in 2028. And our GDP growth is projected at around approximately 5.7% in 2026, with the ADB and other multilaterals converging around this range. Fiscal policy will continue to prioritize sustainability over the cycle, preserving the gains we have accumulated even as the commodity price normalize. Our transition toward the low-carbon economy is underway and is being pursued in fiscally disciplined manner. In November 2025, we launched the Just Energy Transition Framework to guide Mongolia's shift from coal to clean energy in a way that is socially equitable and economically resilient. We target 34% renewable energy capacity by 2030. And Mongolia has over 2.6 terawatts of estimated renewable generation potential, an endowment comparable to the largest renewable economies around the world. And we are converting that potential into capacity, working with major international partners including European Investment Bank, EBRD, with whom we are developing up to 300 megawatts of solar and 200 megawatts of wind capacity by 2028. These investments will be pursued without straining the macroeconomic framework or the sovereign balance sheet. Let me close with the diversification story beyond mining. Agriculture was the largest contributor to 2025 GDP growth. Cashmere exports exceeding $340 million and government support is focused on building out export value chains. Tourism reached approximately 850,000 visitors in 2025, supported by visa-free entry for selected countries, e-visas, streamlined regulations, and expanded airport capacity. On renewable energy, Mongolia's current installed capacity is 62.8% wind, 28% hydropower, and 9% solar, a mix that reflects our exceptional wind and hydro resources. That concludes my presentation, and thank you for your attention. We hope that this presentation gives you a clear picture of where Mongolia stands, and hope to answer any of the questions after this event. Thank you very much.